Gonzales with your Mortgage Market Minute, the housing market forecast and update in Hawaii, and then obviously across the nation, but most specifically on our island of Oahu. Before I go on, let's like, comment, subscribe on my YouTube page. Got a lot of positive feedback recently. First, let's get into some of the reports that came out this week that affect our housing market. New home sales report came out on Wednesday. New home sales month over month down 11%. This year over year, they're down 17, almost 18% year over year. And actually, that number down 11% is better than what was expected. The expectation was 13%. So that is good news. And of this 460,000 or so inventory new homes that are out there right now, actually only 56,000 were completed. So a lot of new homes, but not a lot of new homes being completed. So that's kind of a telltale sign that the market is slowing down. Again, this goes back to the builders. They're not building a lot of homes. And locally, builders are given a lot of incentives because the longer a home sits on their lot, the more money they're going to lose. So if you could get into a new home in Oahu, you got a chance. You got to go for it. The builder incentives are really, really good. And that's taking business away from me. All right, so I'm telling you right now, if you can get a new home, all right, it's still difficult. Not doing lotteries, but, man, that's where you're going to get a lot of incentive. Now, as to the quality of the new home, I can't say. I'm not the builder. I have heard some reports that some are better than others. So just buy cautiously when you're looking at new homes. But the incentives for new home sales, new home buys are pretty high. Another big report that came out this week, the Case-Shiller Home Price Index. This is the gold standard for home price appreciation across the nation. Now, the one thing I don't like about this report is it's old. It's like from August. But you know what? Some telling information that it foretells what's happening in the future, certainly the trend that we're going to. Month of August, 1.1% decrease in home prices month over month. Largest drop in the history of measuring the Case-Shiller Home Price Index. Okay. That said, year-over-year appreciation, 13%. So still really good appreciation year-over-year for buyers. Where's the decline? So one of the things, when you break it down, the Case-Shiller Home Price Index, they break this down by big cities and how they're doing. The biggest drops were in big cities like San Francisco, Seattle, Phoenix, San Jose, Los Angeles, San Diego. What areas are kind of like Oahu's market, Honolulu's market? San Diego. They are having the biggest drop, but even those drops aren't that big. You're talking maybe 2 to 3%. The rest of the nation is actually pretty, but house prices are stable. They're not going down. Anybody who's waiting for that crash, you're going to be waiting for a long time because it's just not going to happen. It's kind of funny. You read the news. I just saw an article in the CNBC today. Diane Olick, she's a housing specialist. And her headline was, new home buyer demand drops by 86%. That's the headline. That's a big deal. That's a big number. But that wasn't really what was in the meat of her video. Actually, she was saying refinances are down 86%. That's not new home sales. That's refinances. Of course, refinances are down. Nobody's going to give up a 2.5% interest rate for a 7% interest rate. It's just not going to happen. So watch the news. Always know your source. Diana Olick has been negative about the news since she started, since I started in the mortgage industry. She couldn't figure out any good thing to say about the market. Well, I'll tell you what the good things in the market are. Here's one. You don't have as many buyers right now. Sellers are giving credits. My buyers have had great months. Correction. My buyers have, and you know why? Because they're buying houses with no money out of pocket. They're getting seller credits. They're doing 2-1 buy downs. So instead of having a 6.5% interest rate, they got a 4.5% interest rate for the first year, saving over $1,000 a month on their mortgage payment because sellers need to sell homes. And it's they're creating win-win situations for everybody. Still a good time to buy. You just have to have the right mindset. What's going on with interest rates? Well, we have a big event coming up. And actually, we have two big events coming up. In November and in December, the Fed is going to meet, and they are going to make a decision on how much to raise the Fed funds rate, if at all. Expectations going into the last couple weeks were that the Fed was going to do a 75 basis point hike in November and then again in December. Right now, though, the sentiment is against 275 basis point hikes. And rates over the last 4 days have actually come down. Now, they're coming off of a 21-year high of 7.16%, but they're starting to come down. How long will this last? Again, it's a roller coaster ride. We're going to keep going up and down, but if we can trend that roller coaster in a negative direction, that's positive news. And we're going to go take a look at this right now. So I'm going to back out of this beautiful screen. I'm going to pull something else up here. So what I have here is mortgage-backed securities. This is a breakdown of mortgage-backed securities and how they have been moving over the last quarter. Now, when these when these bars are green, that means mortgage-backed securities are going up. That means interest rates are going down. So green is good. Red is bad. Red means mortgage-backed security prices are coming down. Interest rates are going up. You can see that since August, at least on this chart, interest rates have gone. There's been some good, and we were pretty steady through most of August. And then September, interest rates started to go down. You can see this movement as the mortgage-backed securities went down. We had a couple big drops. Okay, and right around in September is when we really started to creep up into actually the end of September. That's when we started getting near our 20-year high in interest rates, getting into the 7% range. We had a couple days of goodness, and then we had a couple bad reports. That first week of August, we had the Consumer Price Index report. Bad juju there, over 8.6% inflation. That sent interest rates up. All right. Mortgage-backed securities, they went down. Mortgage rates went up. And this is kind of the area that we've been in. But the last 4 days, the end of last week, the beginning of this week, we have seen a tremendous increase in mortgage-backed securities, a very good, solid movement down in mortgage rates. But we're still in the 7% range. Let's look and see where we've come from. Let's look at the last year. This is something, and this may not even make it in there. But look at the last year in interest rates. In January, we were in the 2% range for interest rates. And then the feces started hitting the fan. And mortgage-backed securities started going down. Interest rates started going up. And May was a bloody month for interest rates. You see this huge drop here. We kind of steadied out for a while. And then just recently, over the last couple months, interest rates went up. Right now there's not a lot of news coming out. The Fed's kind of gone into hiding while they do their preparations for their meetings coming up in November. So there's not a lot of headway from the Fed, not a lot of movement. And every time they talk, it's like the old E.F. Hutton commercial. When E.F. Hutton talks, people listen. When Jerome Powell talks, people listen. And it's kind of good that they're out of the picture. But that also leads us to those idle hands. What are they doing? All right, when there's no news, we tend to focus on the negative news, and that's what sends interest rates apart. But right now, it's looking like we could see some positive movement for interest rates. Typically, when you hit a new high in interest rates, a lot of times what you'll see is interest rates kind of come down. It's kind of like that hangover period. It's kind of where we're at right now. Last 4 days, rates are coming back down. Not sure how much lower they're going to get before they go back up, but we're in that good hangover phase. Not that I can't get out of bed hangover, but it's a hangover where we're just going to keep moving. So the economy's slowing down. It's evident. You look at the earnings reports coming out. Some of our biggest winners, some of the biggest tech companies that we have on our stock market, Google, Microsoft, Meta, they're all reporting pretty ugly earnings. And that's a sign of them slowing down. The other thing, we look at port loading. Earlier this summer, we were talking about there was going to be a strike in the ports. We had supply chain issues. We had hundreds of ships waiting outside of Los Angeles Harbor trying to come in and offload their goods. We're back to normal now. And why is that? One, some of these supply chain issues are gone. Two, the people who are ordering all these goods, they have excess inventory now. They didn't have any place to put any of the goods that were coming in, so they're not ordering as much, which is also an indication that people aren't buying as much. So, right, that's an indication that the economy is slowing down. And that's kind of, those things are all weighing in on, I think, the interest rates coming down in the last couple of days. Another thing, rent's going up. Yeah, I mean, you're paying up to 50% of your income to pay somebody else's mortgage. Say, what? Yeah, pay your own. Yeah, pay your own. Hey, it's expensive to buy a home. That's one of the reasons why inflation is so high. The cost of shelter is probably one of the biggest, has one of the biggest negative effects on our inflation. So if you're going to have to, you got to pay for a home anyway. You got to have a roof over your head. Might as well pay for your own. The opportunity to buy now is now. And if you can, and if you can stay in a budget, I'm not telling you to eat ramen for 3 meals a day. Not at all. But if you can buy a home now, take advantage of some of these programs, it's still a good time to buy. That's all I have for you this week. Hope you have a great weekend. Happy Aloha Friday. I'm going to Kauai this weekend because my son's running in state championships for cross country. Super proud of him. He just made Eagle Scout 2, and I'm signing off on that good news. All right, aloha.